Yeah. Morgan Stanley, guys. MS. And that is probably on the New York Stock Exchange. We're going to do some Weinstein stage analysis on the weekly. But first, monthly, guys. We got to establish that trend. You don't want to be playing stage 2 on the weekly when the stage 4 is happening on the higher trend on the monthly. That's just suicide, guys. You're not putting the chances in your favor. Guys, I don't know if it's 2008 all over again, but Morgan Stanley is definitely rolling over. Roll over. Oh, all right. Look at that. Monthly defined resistance. Look at these wicks out. Refused. Oh, loud buyers came in this one. This one tried again. Refused. And what do we have here? We have break below the 12-month moving average. So you don't want to buy if you're below the 12-month moving average. You don't want to short yet. You want to make sure you break down below an important support level. But the 12-month moving average is already starting to angle downwards, guys. Already. So if you start angling downwards, then before it starts going flat again, well, you need some price action above and then more. But right now, this is the candle of September. We have one more day in it. And let's see how deeper it could close below that line right here. We have a few targets. Oh, let's get narrow. Arrow. So we have this small consolidation pattern right here. That'd be the first implied measure move. Bring us back down here. Remember, I always say patterns within patterns. Well, that would... This target I don't like yet. It seems to not be mature. So I'm going right through the support. Sometimes that's a clue that I'm just missing something, that there's more intermediate pattern. There's more work to be done to be able to have that bigger pattern. But if we have this launching pattern, give us a target here. And then this could be the patterns of all patterns. And that could be a little bit more interesting. Bring us back down all the way to these 2016 lows. The wall, previous resistance, now turns support all the way down to 27 level, 2750. So that is how I see this drawing out right now, guys. Target close to these levels, 42, 42.50, 42. And after that, if we have a break below that, all the way down here to 27 levels, 27.50. So the monthly trend is definitely not an uptrend anymore. It's flat and even started to go down. So breakouts or breakdowns, and then making first breakdown, then a second breakdown, really skewing that moving average downwards, the 12-month. Very powerful moving average. See, this is like years. Once it starts going up, you had it for 1 year, 2 years. You could have ran this stage 2 here for 3 years, man. That's a lot of high movement. And when it starts going down, it goes down faster. Fear, people panic, long wicks. And this went down for about 1 year, one solid year right here. So even a correction, even if it's not a crash or even a 30% correction or 50, it's already started here at the beginning of the year. So maybe it's going to end February of next year. We hit these levels here and then we see what happens from there. Either we go up or we continue down. Woo! All right, weekly. A lot of things here. Okay, let's remove all the lines. First thing, we could look at the Mansfield relative strength. Underperforming the SPX. Hey, where's my arrow? There it is. Okay, that happened. Underperforming the SPX since June. But more than that, we're 30-week average chart in decline. Price action below, down, weight of evidence, lots of stuff piling up. Crescendo volume on those red candles, picking up, negative. The only thing that we wouldn't have shorted right there at this level is this Ichimoku cloud. Look how it goes in, but doesn't want to go out. Gets sucked back in. So here's the first breakdown. You can see it right here. We had the first breakdown right here. And then you could say, okay, I could break down, but have a chance of pulling back up. And it did. Came back up, close to the 30-week moving average in the cloud. Still downtrend, prevailing downtrend. Instead of reverting, just a simple correction. Just a simple or reversal going back up. No, it's just a simple pullback. Down, out of the cloud. Little pullback, trying to go back up. In, no. Look at that, 30-week average, man. Starting to push you down. So right now here would have been a nice risk to reward ratio right here. You're under the cloud. The 30-week average is really starting to go down. You've had those pullbacks that failed. And now going down, guys. You never want to short if the Mansfield Welter strength is going upwards. So you see here it's starting to go upwards. And then you wait. When it starts with that red candle, start to bring down that Mansfield Welter strength. You had that V shape right here. And that's a nice place to know that the pullback is complete and it's time to short. Plus, remember what we saw on that monthly chart? Well, on the weekly, you even have a nice close below that weekly defined support right there. And this is the monthly right here. And even close below that. So stage 4, guys. Morgan Stanley, the heat's on. What we could do now is look up financial sector and investors brokerage. Okay, so let's look at the sector. Sector. Financials. Right here, financials. Look, guys. Stage 3. And stage 3. Oh, back into closer to stage 4 territory. Underperforming the SPX. Even the financials are trying to turn over, guys. And remember, leaders, they're always like the first ones to explode out before an index starts rolling over or starts going upwards. Morgan Stanley was probably maybe outperforming at that time, and then the rest of the field came up. And when it starts rolling down, the leaders are the first ones to go out. And after that, the money starts flowing into those laggards, those secondary quality stocks that keeps bringing the index up, while the leaders have already been starting their stage 4s, guys. And let's look at the industry. Investment banking and brokerage. Well, look, this is pretty much a Morgan Stanley chart. Classic support through the Ichimoku cloud, breaking down below that level, underperforming the SPX. Lose. So if you don't want to short, good, but don't. It's a dangerous place to buy when the moving average are starting to go down. It's a dangerous place to buy when you're below the moving average, when you're below support. You could see it over and over in charts. Wait for a stage to end. If you want to play counter trend, well, make sure that higher prevailing trend is finished or starting to turn over. I'm just going to compare it to the financial sectors. Underperforming its sector, the financials. I'm going to compare it to its peers and underperforming its peers, guys. So that's where Morgan Stanley is, guys. Stage 4. You could wait for Monday, just in case there's some crazy reversal and the price action closed above these monthly defined breakdown lines, these weekly defined breakdown lines. And if that doesn't happen, then this is a pretty secure short, guys. All right. Thanks for listening. Ciao, guys.